Alright, boys. Time for another update. Hope you're all well. Hope you're making money. Really depends how you're viewing the US dollar, right? How you're trading at the moment. Now, we've been in short US dollar for a while. It is no surprise that dollar yen tested 100 again. I'm a little surprised it has held, but then again, range trading might be the theme this week ahead of that Jackson hole. That Jackson hole has got enough rent risk that perhaps we're to the stage where the market doesn't want to get too aggressively short the US dollar. Just in case there is some notification to the market from Yellen that, there is going to be a Fed, unless she tries to jawbone it. Now, not jawbone it, but just talk up the chances of a September rate hike. Now, we've talked about this before, that it's unlikely that she will, and it's unlikely that any rally will be sustained, because they haven't done a very good job of trying to talk it up yet. And just what I feel is the situation is that they're just giving the necessary lip service as to not be seen by the markets as ignoring the latest data, which has been quite strong. The last two NFPs have been quite strong. So they're saying to the market, there's a potential that we're going to raise rates in September, but don't bank on it. Couching their bets. Now, if they're couching their bets, then they're not talking serious about raising, and they're not giving the same sort of guidance they gave into the run up to the December. And it's a little late for Yellen to go full crazy and let us know. So that, we talked about this yesterday. I'm just trying to clarify a little bit, just again, what I mean by that. The pathway that they've taken so far is more that they're just letting the markets know it is possible, but the way that the market's been reacting to these comments from some of these central bankers and the chances priced in means that either A, they've done a very bad job of communicating it, right, or B, they're not worried about the market reaction to them surprising. Now, we know they are worried about the market reaction. Okay, so this is the last chance, really, in terms of the Fed coming out and saying, Yellen has to really make it clear that they're going to raise rates if it's going to happen. So in that regards, there is that big event risk, but the timing's so late that, it just doesn't make sense to me that she will do that. I'd be very surprised. Also, next, week after, we get the access to the NFP for August, so maybe, they'll be waiting for that anyway, but it's just the timing's off for me. So I'd be surprised, and even though the market is starting to increase its chances, so it's gone up from 10 to 20% in the last couple of days, that they're going to raise rates in September, maybe 22, 23%. I think this is just giving a little rally, nothing really serious. And the US dollar sell-off that you're seeing across the board, led by the euro and the pound, again this week, in spite of what Fisher said, means that, there's really nothing serious there. All right, so the pairs which are underperforming, though, right now are the Aussie and the Kiwi. Even though the Kiwi's resumed its uptrend, it's still relatively quite slow compared to where it could have been by now. So it has a little consolidation. They did cut rates, so we can forgive it. I said to be worried about potential jawboning coming from the RBNZ governor yesterday, and they failed pretty bad. He's terrible at jawboning. He doesn't know what to do to say to get the market to go down. Basically what he said today, and I'll bring it up on the chat there. And I was there watching this live because I'm doing 6 a.m. shift, Sydney time at the moment. Straight after the US close, I'm on the office taking over the phone calls. He says something along the lines of rapid cuts are not needed, and we are still data dependent. That's not what you say to a market that's looking for an excuse to buy the Kiwi dollar. Yeah. So what they're saying here, he was extremely balanced, and he was saying 35 basis point is priced in. 35 basis points is not 2 rate cuts, right? And so really, any sort of chance that we're going to see a backing up of the RBNZ rate card again at the next meeting is out the door. So there's this little bit of relief now from those who are looking to buy the Kiwi that you've got a fair bit of time to push higher. He did say the same stuff he said before about the TWI being very overvalued. All right, but it's not. That's not going to stop it. I mean, they really have to talk about. He has to start threatening. He has to start threatening intervention. Now he's talked a little bit about intervention, right? That he hasn't really started just yet. He came out after the RBNZ cut and the market rallied, and was like a little warning shot, but not much. And the last time they intervened was way back, 2015. I have to check that. But he has intervened a couple of times already. But one of the conditions for the intervening is that the market has to be an opportune time. And what they've learned lately, and what you can mean by that, is that the Kiwi has to be under pressure. So the Kiwi has to be under pressure from, say, a New Zealand, a US rate hike, or something to get in the US dollar buying, so the Kiwi turns a little. And I'll go back in time with you so you can see exactly when they last cut, when they last intervened, so you can know what I'm talking about. It's ways yet, guys, for that sort of talk. We'll probably be, Aussie Kiwi near parity before you get that huge amount of pressure coming from the market for them to do that. Let's have a little look though. Which doesn't mean this is a foregone conclusion what's going to happen, but I bought a fair bit of Kiwi today. Did well. That's the sort of thing I can easily do when the market is just like gives you a gift like that. It's like, well, might as well buy. It's not like it's going to come out again halfway through. Okay, so when did they intervened here? Okay, the market had already fallen a fair bit, and then they intervened. This is the last little bit. Really broke the market, pushed it below 80. So that's back in 2014. They came out, said they were intervening while they're intervening. That even added to the selling pressure. It was fantastic, actually, if you were back there. That was some pretty aggressive moves in the sell-off here. So really, if they're going to intervene again, because their TWI is now way back up there, mainly because of the Kiwi so low, you're going to have to see the Kiwi to be weak for some reason, rolling over anyway, at least on the US, so that they can add to that momentum and try and break down some key levels. Yeah, it's just a little bit too high at the moment. It's looking very strong. I like it to be buying on dips, for that 75 test. But that means that also we should be buying the Aussie. Now, the Aussie has had its little consolidation for a few days from last week, and at the 77.50 level. Came back down, tested 75.80 yesterday. It's really underperforming, but I do like it. Top side feels like it would be hard to stop over time here, especially if the euro gets its groove on and Yellen is as dovish as a forecast. So it's a pretty good level. It's not as low as I wanted it. I was looking for the low 75s, really pushing back along the trend channel, but it's been a bit relentlessly strong for a while now, and you haven't really been getting that level that you want. So I'm starting to accept that this is the extent of the pullback, and a few more days above 76, and I'll be looking to buy at some point. Now, the pair which is really under pressure though is the Canadian dollar, as in hasn't been able to follow the rest of the market in the last couple of days, the euro, and that's because oil's had its first pullback for a while. Now, oil is a funny little beast, but it was always expected to do a pullback after rallying $9. So the pullback's necessary and needed. I was selling here on this little rally, 129.20 yesterday. Got stopped out at 129.60. It was a little bit, maybe my stops are too tight. But it looks like the oil's still looking for this support, so there's no rush probably to get back into it. Now the support for the oil, which is key for us getting back short dollar CAD, is at the previous levels. Let's have a look here for you. I'm going too fast. Going too into back. All right. So 46 was when the market was consolidating that previous big rally. 46 to 50 was that big level. All right, and I'm looking for oil to find support between 46.50 and 46 on this way back up. If it gets back above 47, then I'm looking to be short dollar CAD into the Jackson hole. That's one way of playing this potential Jackson hole. The other play I have is long euro dollar, and we'll look at that in a sec. But long euro dollar, and if you're really crazy, having a long pound. Maybe, right, it's safer to wait until after she speaks. I mean, obviously it is, right? But it's get confirmation that the market is not going to react to whatever. I mean, she has to say something along the lines of September is a live meeting. But within her other comments, I think it's going to be pretty clear to the market that it's not that live. So she's going to back up what the other guys have said, that, you know, it's potential for them to raise rates. I mean, she has to, given some of the data that's come out. But, you know, what is expected is that, and that won't be enough. So as long as that is the case, then any sort of immediate reaction is probably going to be faded pretty quickly. And, you know, we're setting ourselves up some pretty weak US dollar for the next month or so, especially if data comes out from the UK quite strong and the euro tries to get its move on and dollar yen slips below 100. A few things haven't happened there. You know, that namely we haven't got the speech yet, and also dollar yen below 100 is a little hard, and the euro's unreliable partner. All right, but if everything moves together, then you're going to see some nice follow through moves. We don't really need the euro or the dollar yen for the Aussie and the Kiwi to rally. We don't really need the euro for the dollar CAD to fall, but it would help, all right, to overextend those moves and to make it clearer. CAD's much more related to what's going on in the oil markets, and the Aussie and Kiwi is just going to do really well while stock markets are doing really well, and the market searches for yield. So, you know, that's basically the update today. It's a little bit, I mean, similar to yesterday, and unfortunately this week's not going to be crazy. We're just going to watch the market develop, see if you know, if it range traded. I think the risk are range trading here to a pre-US dollar sell-off. So I think those are the two risks. So looking to be buying euro on dips, potentially pound on dips. There's no real data to be worried about. Literally the main data point probably for us is going to be the crude oil inventories on Wednesday night, and that's going to make an impact on our dollar CAD plans. So I'm not in the dollar CAD at the moment. I am in the pound Swiss long. I am in the euro pound short. I am in the euro USD long, and I am in Aussie yen long. And I've still got those Aussie Kiwis from back in the day. Now Aussie Kiwis is dangerous here. Unfortunately, I've only bought in this account. I haven't bought in any of my other accounts, so I've still got a fair bit of firepower left. But there's no reason to be buying more here. No reason at all. This is quite bearish. If this goes into range trading like it did before, then it's probably going to come from the Aussie starting to play catch up with the Kiwi, because the Aussie is underperforming. But I don't think that's a reliable prediction as well. So this is a pretty bad trade at the moment, and I'm just going to be sitting on it for a while. The only thing really you got going for you here is that it's quite stretched, right? But then again, a lot of people are involved in the long Aussie Kiwi, so this could be a bit of a sucker's play. I'm not going to be adding to that trade. I'm just going to be holding, seeing how it develops. Maybe hedging a little bit via Kiwi long, which I have been doing quite aggressively in some other accounts, but I need to get some in this account just so that don't get into equity problems. I don't want to have to add, double the equity here. I mean, I might, but I don't really want to have to do that. So yeah, I mean, it's a pretty quiet week. It's a pretty quiet month so far as well, but it is developing into this US dollar sell-off, and I think that's what you have to keep on remaining focused on. That pretty important here that oil does hold, actually. I mean, it's likely to. I don't know. Who knows with oil? It's not likely to, but there's a support level there, so hopefully. And it's a conditional part of our dollar CAD trade, so we pretty much need it to before we sell that dollar CAD again. I mean, we've already made a fair bit of money off the dollar CAD, so it's all about trying to extract more from the market, right? At the moment, you haven't got too many good opportunities. There's nothing really compelling. I mean, no one wants to be selling dollar yen here. Okay, it's pretty clear it's in a downtrend. It's looking weak as hell, but no one wants to be selling. No one knows what the Crow is going to come out with their BOJ review. They're doing a review at the moment, right? I mean, they could come out with something spectacular. Remember, there was that PM advisor come out and said there's more than a 50% chance that bold BOJ action is coming. I didn't actually check what time that would be either. Let's have a little look. When is the next BOJ meeting? Little ways away, by the looks of it. Unless I missed it. Yeah, okay. September 20. So we've got some time. We've got some time for this BOJ meeting. We've got some time for potential, bearish yen headlines to come out in the lead up to it. Expectations, though, expectation management from this central bank is the worst. So the BOJ is terrible at keeping the market satisfied and also following through with better than expected or greater than expected moves. Just checking the room, guys, see what's happening here. What's Tim talking about corn for? We're not buying corn, Tim. We're not getting into the softs, mate. That shit's crazy. Clients sometimes ask me about the softs, and I have a little look at some of the charts. I'm like, what is going on here? There's like 30-40% movements in 2 to 3 weeks. Some pretty crazy stuff goes on. I was looking at wheat and corn actually as well. But wheat and corn have got a bit of a relationship, but wheat is just really hard to make a rhyme or reason of some of these moves. Like it's ultra aggressive, 5% moves in a day type stuff. Tell us a joke, says Nick. Don't be ridiculous. Hey, I don't know, man. 6 a.m. shifts are hard for me. Hard for me to remain. So this is equivalent to being, I don't know, 10 o'clock night time. So I'm pretty slowed down by now. I mean, it does make it harder to do the update, but it's not so much that it's the market's actually quite slow today. And it's going to be slow for the rest of the week until Yellen. I can't see a catalyst. If you're looking at that calendar like we just looked at then, right? That's a really barren calendar. That's one of the most barren calendars you've seen for a while. IFO and durable goods orders does not move the market. Second estimate of the GDP, Q2. Alright, that's not going to move the market. Preliminary is not going to move the market. That's the second one, right? So Yellen's the only thing coming. And so yeah, don't get excited too much here. But sometimes it's good to trade in these sort of weeks because you can see there's underlying feeling, and you can sense that the US dollar is definitely under pressure. In terms of where I want to be buying the euro, I mean pretty close, pretty soon, 113.20. You know, euro, the pound pretty close as well. Pound I'm not going to really get involved though unless I get a nice level. But this oil, interesting price action here. And yeah, okay, so if we have to trade here, it's going to be some dollar CAD short. Nice thing about this is that we do know where to put our stop now. And CAD yen long. Now, CAD yen long is a little bit of a cheeky trade, but it's one I think makes sense. And it's another trade that people who are looking for risk can get involved in, just mainly because it's got a tight stop and relatively strong upside if it does bounce. Alright, so this is hard. This is like a cross, right? So it's like, well, this chart doesn't look very easy to read or strong, or you know, what's going on here? Why are you involved in this? It's to do with the combination of dollar yen support at 100, well, just the big level being at 100, and dollar CAD being a decent sell. So, you know, if you're looking for a trade, sometimes you have to be a bit creative, and this can come out by either dollar yen rally or by the CAD outperforming. And you know, if the low is in oil, which it might be, then you know this is going to work out. But the CAD will be strongest against, you know, most of the pairs. It might be a bit early on oil though, so we'll review that trade tomorrow. But anyway, it's only 30-40 pips loss, so nothing to be too worried about. Last night in the DAX, we did see the market slip below the 10.5 support. No, so where did 10.5 come from? People want to know why this market crashed below 10.5. It was the previous year high, and sorry, the previous year high, and also the pre-Dagset high, Greg's at high. And when the market slipped below it, it was just, it went berserk. Okay, so that was like a 5-minute graph, and so everyone had their stops just here, and there was nothing in it, but it just rolled through. There's no support. But the way that the market consolidated afterwards was a little bit of a giveaway. Still, straight back into buying is pretty aggressive stuff. It does look like it's going higher now, and you know, targeting, I suppose. I mean, look, if it wants to continue to rally, 10,000, 11,000 is nothing. So we still got a fair bit of room to go back to the. We will do anything to save the Euro Draghi QE type rally. So yeah, this is pretty bullish setup. And I mean, I should be long this. I missed this rally at the start. This is very bullish. I said that we're going to trade at the indices a bit. We have been ignoring them a little while, mostly because we're waiting for pullbacks. Now we just got the pullbacks, and this is, you know, giving the confirmations that the uptrends are still holding. So it's there's less risk going long in the current market than there was a little while ago. So this is actually this is a pretty bullish setup. I should be long this already. I'll look into it, see what if I can get long soon. I'm not going to chase it right now, but yeah, it's not bad. You're gonna... Yeah, Nick. Jesus, man. Fuck. I'll go into whatever, whatever game that is. I would love a 6-screen trading setup. Might have to get a new desk as well, though. We're talking about the 6 screens. You're talking about the computer that can run it, because you're going to need 2 video cards in that. Yeah, I mean, what Lulanese is talking about, but I think what Nick's talking about Lulanese is to have the 6 mount. So what do you have, 2 4 mounts? Oh, wow. You're looking at 3 to 4 grand, Nick. 3 to 4 grand. I mean, it doesn't require a supercomputer, it just requires the video cards. So the base computer is 2,000, and you should be able to get all the screens and the mounts for 2,000 as well. And that would be a beast. Yeah. You're going to have to pay. I mean, if you go down to the Chinatown here in Sydney, they'll build it for you as well. You might have to set up the mount yourself, though, when you get home. Just for practical reasons. 4K all up. That will give you a beast. Yeah, that would be sweet. What sort of competition, though? A trading idea competition, or? Yeah, so if you're watching this on YouTube, guys, we're talking about a potential new competition here for Signals. And what we're talking about is a 6-screen, setup. If you've never seen some of the pictures inside, there's a forum thread that's very cool. The forum thread on trading pictures. Let's have a little look at that. Some of these guys, I mean, this is like trader porn, right? Some of these guys have got ridiculous setups. Like, I had a 6-screen setup back in the Gold Coast, but it was pretty ad hoc, right? It wasn't custom built. I built it myself, and it worked, but it was not, didn't look schmick. Some of these guys got some schmick stuff. It's inside the general Forex area. Trading desk pictures. See, that's a K. But want to have a look at some of the nicer ones. Oh, a broker. Oh, that's a smart idea from whatever broker that is. It's a smart idea. It's not my broker. I didn't come up with that. This is this Daz. It's nice, but a little ad hoc, right? That's what we're talking about, ad hoc. I mean, it could be just a picture, but all the monitors don't look the same. This one's pretty clean. Yeah, it's not a bad little thread, though. I'll put it in the chat room. Right, let's have a quick look at some of the oh god, did I shut it down? We'll end with a little bit of the data look from some of the few bank reports. See what they're focusing on. In particular, we're going to look at the technicals here from our friends at Danske. We haven't looked at that for a little while. And also we're going to read the macro review from Jim Reed at Deutsche Bank. Not a bad analyst. See what his take is on Yellen, actually. See what his take is on Yellen. And maybe finish with just this little look at some oil news. If you do want me to have a look at particular cross, guys, I mean, crosses are in play a little bit more, but they're probably not going to be too aggressive. The Kiwis obviously outperforming everything, but there might be some interesting levels coming up here. I'm pretty much focused on the majors because I'm focused on the US dollar at the moment. Pound Swiss. Pound Swiss. We're buying Pound Swiss. I'll talk about that one. It's one of the only trades that I've got making money. So the pound short squeeze is coming across on all the crosses. And the Pound Swiss is from a really, really low base. So it's still in a downtrend, and this is more of a short squeeze than anything else. But it does look nice. So let's have a little look here. It was at 125 at its lows. Starting to do a nice little rally here. A lot of distance to cover. You know, 130s, it's a viable target on any extension here of the pound. A good thing to check is what the Euro Swiss is doing. Still range trading. We didn't get filled. We almost got filled on our limit order. We've had that limit order now since we took profit on that previous one. So we had that limit order. We bought last time. We went down to 101.20, and we got out at 109.08 actually. I think. And let's have a little look at that. We can check that. Euro Swiss. Back in the day, Euro Swiss. Not the right one. Yeah, 109.02. So not perfect, but it was decent. Anyway, we tried to get back in on the same level. Perhaps we were a bit ambitious with our entry, and we didn't get in, so it's still range trading. That is good for the Pound Swiss as well. But ideally, you're buying Pound Swiss whenever the Euro Swiss is low, just to give you that extra oomph, extra 60, 70 pips when the market does correct. So a little bit of this is Euro Swiss rally as well as just a pound outperformance. So your Pound Swiss is looking good. Keep an eye on pound, of course, because it's the instigator of all this. But yeah, Pound Swiss is good, and Euro Pound's starting to form some nice little tops. So we sold some Euro Pound as well, and Euro Pound looks even more bearish. Not a bad little sell on the Euro Pound. Mainly because the euro is just useless at rallying these days. We had so many plans for this pair, right? Like, in my dreams, we're already at 115 going into this Yellen speech. But it's the slowest grind we've seen for a while, right? This could, back in the day, a move from 110 to 113 could have been done in, I don't know, 2 days. This has been 4 weeks, which is crazy stuff. Crazy stuff. And a lot of people aren't even trading the euro at the moment because it isn't volatile enough. It's a little concerning. None of these pairs are really in play at the moment, just checking some of these levels. I mean, look at the Euro Swiss. The 20 moving average is 108.60. The 50 moving average is 108.50. The 200-day moving average is 109.20. Right, so this pair is the dullest. This is like the worst. RSIs are so contained as well. Nothing's going berserk. Surprised Euro's so high, 70. You know, technically not much is being given at the moment. Maybe they're trying to kill the FX industry by making the market quiet. But, you know, these sort of lulls in volatility happen before big moves, right? And the euro has to break one way or the other. It's not going to stay between 105 and 115 for another 2 years. It's already been down here for 2 years, and that's extremely tight. If you're looking at the average yearly range, I think it's generally like 2,500 pips. And so the last couple of years has been very tight at about 1,000 pips. He's, you know, my mate Jim Reed is saying the same things. 12 months on, and markets have rarely been this quiet. A little bit of to and fro from the Fed speakers has at least caused some excitement, but in general markets have got little to feed on. Pretty true. Main story has been the pullback in oil. You know, I mean, we're trying to make something out of nothing, right? Out of hay. It's just, there's nothing there. S&P 500 has gone 31 consecutive sessions with daily moves up or down of less than 1%. I did not know that. That's kind of crazy. We're talking about the rally faded. Treasury has followed a similar path. And the yields, which show the rate paths for the US, did rally at the beginning on Monday after those comments over the weekend, but ended lower. Right, so they're not believing. Fed Fisher's is second in charge. They're not believing this stuff. September's nudging higher slowly. It's 24% now. That's sneaky. That's moved up a bit. All right, but 24% when we're so close to it is not enough. If the market goes from 24% to like 80% after Yellen, there's a huge crash in the stocks, potentially. I mean, what we saw in the December rate hike last year was a delayed reaction, but you could see it being a catalyst in the current market for some movement. And traditionally, if there's a big sudden movement, whatever way, a big sudden movement is pretty negative for the stock market as the repercussions ripple through all the economies. So Yellen, I mean, if she does do something drastic, it would result in a huge move. Alright, so there's 2 pages of report, and then we have 6 pages of disclaimers. Hilarious. Alright, this research, any access is only intended for wholesale clients. So you guys are not eligible to read it. Literally, you're not. Under like ATSIC rules, right? It's like they don't want them dealing with retail clients. So it's back in the kitten gloves. Just checking if there's anything going on with the oil. Alright guys, so yeah, I mean, just because the market's pretty quiet doesn't mean we have to overtrade here, but I mean, we don't have to trade, right? That's something which is an option for us. We'll still continue high. You can end up trading pairs you don't usually trade, looking for something when the market's not moving. I would suggest just trading smaller if you're going to do that. Trade pairs you've never traded before. But also, there's nothing wrong with just waiting out August, waiting until some volatility returns. And there's some coming. You know, definitely some coming. Whether it be US election or it be, you know, a potential US dollar sell-off post-Yellen, you know, or as the market moves into September FOMC and they don't raise rates and people lose faith in the Fed, similar to how they lost faith in the BOJ, something like that happens. There's always a new story. There's always volatility around the corner. This is just that lull. But we'll be back tomorrow, 9 GMT, or thereabouts, and if you do want me to look at a particular pair, I will do that. Just send me a PM. Other than that, though, you know, trade safe. I might post a trade actually later if I get involved in the dollar CAD. Watching this oil, pretty interesting here. Alright guys, good luck tonight.